Hi, this is Joseph. In this video, I want to answer a question that I get on a regular basis, and that question is, what trading style do I use? Like, how do I trade? How do I get into my trades? What do I use to identify the actual setup? And is it manual? Is it automated? So with each one of the trades that I execute, or that you will receive if you subscribe to the Trade Copier service, all of those trades are manually executed by me. So what I'm doing is obviously technical analysis. My trading system is purely based on technical analysis. I do not trade around the news. If you've traded for quite a considerable amount of time, I mean, you realize that trading around the news can be a pretty risky situation. Sometimes you can make money and sometimes you can lose a great deal of money. So my trading system doesn't really even give me any trade entries or opportunities with the news. Very often it's as a result of the news, either before the news is actually released or afterwards. So it's when the market reacts. And when the market reacts in a certain way, you can see that it starts to create ranges of consolidation. Now, everybody trades in a different way, right? I'm not saying that my way is the only way. It's just the way that I trade. And I've been doing this for 20 years, and this works out the best. So what I'm doing is looking for the best trade location every single day on each one of these currency pairs, on any commodity or stock or futures or indice, whatever it is that I'm trading, even Bitcoin or crypto. I'm always looking for one particular choice trade opportunity where I could be trading alongside with the smart money when the breakout occurs or develops, and then it breaks out, and I ride that momentum. So a lot of people, when they hear me discuss and outline my strategy the way I have here in the last minute or so, they ask the question, so how do you determine when smart money is stepping into the markets, and how could you trade alongside with them to enjoy the opportunity so that when you get into the trade, it's mostly a pretty smooth move to the expected take profit targets. There's really not a whole lot of waiting time. And I'll bring to your attention this area of consolidation. So sometimes when I see an area of consolidation, when I first started trading, I would trade off of candlestick patterns inside of consolidation, and it wasn't going anywhere. Price ultimately really wouldn't go very far. I would get a lot of signals that would fail, like I would get a bullish engulfing candle and I would buy, and then it would roll over and come back down and test support, and I would get stopped out, and then I would do that in the exact opposite direction with the bearish engulfing candle. And the whole thing would just continue to repeat over and over again. And that's where traders tend to get into a lot of trouble, is inside of consolidation. If they're not aware of these different parameters, and they're not watching and tracking the footprint of smart money, and they don't know how to see it on the charts, then you could get into a trade thinking it's likely to break out, but you don't know when it's going to break out, and then you get stuck babysitting a trade for like 12, 18, 19 hours or 2 days, and it really doesn't go anywhere. So I stay out of the markets when I see price moving sideways, and the way that I'm able to determine that is by analyzing the phases. So I'm putting them as sections. Let's say we're categorizing different phases or sections of consolidation. And in each one of those phases, there's specific activity that needs to be in place that I have to confirm in order to move on and to identify the second phase. So you'll notice here I have phase A, phase B, phase C, and then it starts to break out. This is phase C, that last final test. So phase A is the stopping action. It's the stopping action if I see some kind of a downtrend. And then the reversal, what helps me confirm this phase A is the automatic reaction. That's that AR level right here. So this is the automatic reaction. Now, the automatic reaction is going to look it's going to appear, or the confirmation that you need to look for is very obvious. Like, it's very disciplined. There's no gray area in there. It either is yes or no that it's stopping action, and that I'm looking at the automatic reaction reversal. So that helps to solidify and complete phase A. And then we move into phase B, where there's a lot of it starts to fill out this consolidation range to the side, and it starts to move sideways. We get tests of resistance, we get tests of support. And that's where it gets pretty choppy for a lot of people, and they tend to lose a lot of money trading inside of these phases of consolidation, which is phase B, and that's where I usually stay away. Again, when I first started trading, in the first year of my trading career, I would trade all of the time everywhere. I had no idea about these concepts. Like, I was not aware of finding, or didn't know how to find the choice location to get into a trade. Let me show you what it actually looks like. So let's move forward. This is actually a trade that I executed here. So there's the test in phase C. And then you see that it starts to make another move towards resistance and a breakout. So this is an area of accumulation. So what I'm looking at is watching, let's say, for example, smart money, or the composite operator, as Wyckoff would refer to it as. and it's they're acquiring at these specific levels. Smart money is going to acquire or distribute, if we're looking at an area of distribution, they're going to acquire at the lows as opposed to the highs. So again, that's also going to put or print some kind of signature, right, with volume. It's going to be very obvious when I see these levels, either resistance or support, and the activity, and then I can determine who's trading at those times. So here is the last test in phase C, and then it starts to move back up and out, and we get these pullbacks, and these pullbacks are tests of these last points of support along the way. And then, of course, we ultimately get a breakout above this resistance area, or this consolidation. Let me take you to that location. There's another pullback and a test. There was an attempt to break out above that resistance, so that really wouldn't be the best place to get into the trade. So any one of these tests here are a valid area to get into the trade after I've confirmed this phase C test to the downside. And then there's also the final breakout, which is actually the best location. Let me show you right here. So you see how it finally starts to break out above resistance. It comes back down, tests support one more time, which is that automatic reaction high. Here's where I can see the candles and the bodies of these bars. They're holding and staying above that resistance level. Sometimes they'll close maybe a pip or two or three below that support or old resistance, which is okay. But it's the reversal pattern that I'm trying to confirm in these tests, along with volume. So let's move out a little bit further. This is actually the entry. So the entry was at 1.3747. Let me take this out one click. And you can see how, again, the candles continue to hold right here. I'm sorry, the bars continue to hold right at that support level. And this is what I would call a picture-perfect trade opportunity right here. Now, once I'm in the trade, I know where my stop is and I know where my target is. But it isn't based on the data that I see here on this bar chart. I use a point and figure chart to help me calculate how far I could hold on to a trade. In other words, how far is it going to go? How much fuel is in the tank based on this consolidation phase right here, this accumulation phase right here. Based on the data right here, the point and figure chart is going to give me a count with these X's and O columns, and that's going to help me calculate my take profit levels. So let me show you what I did here. Once I got into the trade at 1.3747, you can see that now I'm trading alongside of the smart money. And I was able to track smart money and the behavior here to confirm that, in fact, what I was looking at was the behavior of smart money. Again, measuring, counting the waves. What we do is I do an exercise called counting the waves, and I'm paying attention to this support and resistance level along with volume. So along the way, once I start trading alongside with smart money, the move to the target is relatively quick relative to the time frame I'm trading off of. So let's take this out a little bit further. And again, point and figure is going to give me an accurate count. And you can see how it's pretty smooth. Price continues to move up a little bit higher. And I'm, for the most part, positive in the trade as it continues to move to the target. And here is my target at 1.3800. There was a slight pullback there. And right here, let me take you to that final step. There's my target. And that's when it hit my target. And point and figure actually gave me the count. So it's a lot more accurate combining these two chart types, the bar chart, analyzing the phases of consolidation, waiting for my entry, and then calculating my entry and my take profit levels with the point and figure chart. The point and figure chart, again, it tells me precisely where price is going to go and where it stops so that I'm not guessing. I don't guess when I get into these trades. It's highly accurate. It's extremely effective. It works in every single market, on every single currency pair, on every single instrument, even stocks. And I repeat this process over and over again, looking for these choice opportunities on anything that I'm trading. And this is exactly how I get into my trades. I can identify my stop. I know that my risk to reward is going to be more balanced in my favor. All of that comes together with the use of the bar chart and the point and figure chart. So that's what I use. That's the system that I use when I execute trades with the trade copier. So if you're going to use the trade copier, I think it's really important that you know who's trading for you and what system they're using to identify these trades and look for these better trade opportunities. And you can see, again, when I get into the trade and I'm trading alongside the smart money, it is pretty straightforward, right to the take profit, the expected take profit target. Some of them will hit a lot faster than this. It could be due to the news in some cases. But it's always going to work out just like this, and point and figure tells me precisely where price is likely to stall or stop or pause, and I can lock in those profits. So this was a really healthy trade. Again, the entry was 1.3747 with a target of 1.3800.